so much better at this. All right, so we're live, and hey, it's February, guys. Thank you all for making the time to join us tonight. This is our monthly Some Ventures Band of Angels screening meeting where we get a great group of investors together and look at some fantastic founders and have them present their companies. Or just quick high level, if this is your first time attending, it's a relatively informal event. Try and keep it, I mean, we're serious investors, but we try not to take ourselves too seriously on this call. The advice and the guidance is serious, but outside of that, this is what I like to call a zero threat environment. We don't think I don't want the founders thinking this is their only time ever to present. We frequently have founders come back and present updates, and sometimes the first meeting isn't the right meeting to get funded, and they end up coming back and getting funded on the second or third meeting. So that's just a quick side there. The thing that makes this meeting really particularly great to me, as I invite or let Cal and Brian in, is that we get angels from all over the country, and along with fund managers. And so right here on this call tonight, we've got Osley, who's the executive director of the Band of Angels, and the band is a group that technically we're the chair of here. All right, let's get mute, guys. If we're not, there we go. All right. So at the end of the meeting tonight, the members who are affiliated with the Band of Angels will discuss the companies, and then a company will generally move on to the deal screening, and sometimes you'll have more than one company move on to the deal screening. But we also have members from Pasadena Angels and Tech Coast Angels and New Fund down in San Diego and other groups join us. And those members can reach out to these founders directly and invite you to present to their groups. And our whole goal is to get you as much exposure to investors as possible with the meeting. And and then obviously we want to help support you with capital and then beyond. The format for tonight is that we're going to do a 10-minute presentation followed by 10 minutes of Q&A. Now that may go a little bit longer. We have a handful of updates tonight, so I only invited 3 companies to present. So it's okay if we go to 12-minute pitch, but I'm going to give you a heads up at 10 minutes when it's time to start thinking about wrapping things up. And then we'll make sure that we have sort of a hearty dialogue and Q&A time for everyone. Let's see. Osley, what am I forgetting? If you're interested in joining the Band of Angels, Osley is your point person, and she is fantastic. She recently replaced Sonia, who's also on this call, who's now running the Cane Angel Network, and she's doing a great job. Osley, do you have anything you'd like to share with the group?
Yeah, I mean, if anyone is interested in presenting or becoming a band member, do let me know. We are the oldest angel network in the nation, if not the world. We were formed 30 years ago by a group of semiconductor executives in Silicon Valley, and we have over 150 investing members. Completed over 400 fundings as well, investment worth of 400 million. So good track record there. Please do reach out to me if you are an entrepreneur looking to pitch at the Band of Angels or want to become a member. Thanks, Garrett.
Thanks, Osley. All right, so we have a few other folks I would like to give the floor for a couple minutes here. One is that we've got Darren Ang, who's the executive director of the LA Venture Association, and besides being a great workout partner on the sandhill out here, he's also pretty plugged in with what's going on within the venture ecosystem. And so I want to give you the floor, Darren, and you share what's going on with Lava and what we have to expect the month ahead.
Garrett, would you mind if I shared screen really quickly?
Yeah, that's fine. There you go.
Hi, my name is Darren. I think most of you know me. I recognize most of the names, but there are actually quite a few this week that are new. And so I just wanted to give a quick shout out about Lava and give a quick background. So I should be sharing screen at this point. Um, there we go. We are celebrating 40 years this year, founded on the inspiration of Robert Redford back in 1985. So we will be doing a big Lava Awards in October and hoping to announce a big Hall of Fame inductee. If you know any sponsors that are trying to make a big presence in LA this year, we are desperately looking for more sponsorship for that. And if you want to nominate some folks for it, certainly reach out. Just want to give it a quick background as far as Lava has a lot of different communities going right now. Lava Bio is very active. Lava Space and National Security Lava are two of our newest groups, and we're seeing a lot of activity in El Segundo. Web3 and Women at Lava are also pretty active, and you can kind of pick and choose what you want to get involved with. We introduced Lava Lounge in 2024. We did it alongside three events last year and coming up. The idea is that it's a place for investors. It's a way for me to get you into different events. If you're a Lava member and you're an investor member, we can get you into an event through the Lava Lounge, and then their investors that are attending their event will also have access to our lounge as well as the speakers. So we want to be able to bring, as investors in our ecosystem, we want to bring you kind of more bespoke experiences within various vertical industries. So UCLA's LA Best and MedTech Partner Conference that comes up in March. I'm sorry, not March, May, I believe, this year. And then we're starting to do these workshop Wednesdays, probably next month. We'll be doing founder workshops and investor workshops, particularly for first-time investors. So if you have friends that are curious and want to, so that you don't have to answer all their crazy, stupid questions, we're here to try to help you and answer their questions. And then I'm working on trying to get in the light of all of the fires, we're trying to get a half-day summit going on wildfire detection, disaster mitigation, and various rebuilding technologies. So please feel free to reach out to me if you have companies that fit any of these three categories. We're looking for those companies to profile. And I've reached out to Rick Caruso's office and some other folks. The SoCal Edison may also have some mitigation folks there too. So
All right.
we want to have a big event, and then our celebrity efforts. That's it.
Awesome. Well, thank
Thanks,
you
Garrett.
for, yeah, thanks for sharing, Darren. I'm looking around. I'm fairly confident there's a handful of folks who I haven't had a chance to welcome to the meeting yet, but as we go on, we'll make sure. Raj, I see you. Good to see you, Raj. Thanks for joining tonight. I'm going to continue calling and welcoming folks. I would encourage everyone to not only stick through the three presentations, but the discussion at the end and the networking at the end with this pool of investors is becoming really valuable. And there's some great connections that are being made. Fred Carey, I think I saw you sign on. I was traveling the past couple weeks. Don't kill me for, I know I have a text and I look forward to following up with you on the companies that you shared, and we'll get them into the next meeting. All right, I think I've covered about enough. Now we're going to jump into some portfolio updates. We have one of the nice things here about sort of the collaborative nature of our fund is that angels invest. Oftentimes our fund invests first or after the angel groups. It really depends on the situation. Either way, there's a lot of the Venn diagram is overlapping pretty heavily between the companies that present here and the angel groups that are investing in our funds that's investing. So we're going to share some of our Some Ventures portfolio companies and their updates and call on the founders to share. And I know a number of you have invested in these companies directly as well. One where there probably wasn't an opportunity for angel investment. We'll get out of the way first. I'll call on Frank Mastrangelo, who's the CEO and founder of PayAmigo, to share an update on the progress that they're making. It's been really tremendous to watch. Frank, why don't you go ahead?
Yeah, sure. Thank you. For those of you who don't recall, PayAmigo's payment facilitator focus on providing local payment methods in emerging markets to cross-border enterprise merchants, both pay in, pay outside. Oh, hi, Skylar. How are you? I see her in the background there. And we've been talking for a bit about kind of this pipeline of merchants that we had coming live and volume we had through underwriting. So we have a better sense as to, how that's onboarding, what it looks like, what's really through underwriting now. We're forecasting just from that pipeline that we've been talking about $18 million in ARR by the end of the year, 16.5 of which is like contracted through underwriting, integrating and onboarding right now. And a fair portion of which will be live by the end of Q2. But beyond that, we just this evening, just literally in the last 30 minutes, signed a fairly substantial new merchant in our that's been in our pipeline and like materially increases uh, what we would expect to do from an ARR standpoint this calendar year. It gets to multiple times, effectively the 18 I just mentioned. It's still a little too new to talk about in detail, but we'll I think take the wraps off of that probably in a public announcement in the next 60 or 90 days or so. But it's a brand name you've probably all know and have heard of, so suffice to say.
Awesome. And I'm gonna make sure I don't have enough drinks over here during the presentations to spill the beans, Frank. So I will keep my mouth shut. Actually, I think I have some mouth tape here somewhere that might help me with that. So we'll get to that in just a second. So next up, let's see. Where's my list? We got Mike Massey and we have Aaron Kirkhoff. And we are muting other investors. Great. Mike, would you mind sharing an update on UNest, please? And maybe you can introduce Aaron to the group. Actually, Aaron, I introduced you last time, but either way, Aaron, welcome back. And Mike, take it away.
So I'd like to start with a personal note. Today is actually my 1 year anniversary with being with UNest. So it's been a big year, challenging at time, but we've made some enormous strides. Paid off the SVB debt in full. Now working to close a 1.25 million of the 5 million note to fuel growth and pay off the last of the legacy debt, which we'll get taken care of in the next the next 2 or 3 months. Really excited about the new additions to the team. Tama Mueller joined a few months ago as fractional CTO on the call tonight. And as Garrett just said, Aaron Kirkhoff recently joined as a chief investment officer for UNest Advisors and is helping on the fundraising side as well. The highlights that I'd like to talk about are a little bit on our product roadmap that Tama Mueller is fueling for us. So continuing the automation of the operational processes to drive efficiencies across the company, launch of an end-to-end business intelligence tool that we're working through. I'm really proud about that piece of being able to have that at our fingertips. And now shifting our focus to web onboarding to fuel subscriber growth via our partnership with Ovation Ventures, working hand in hand with Kevin Simmering and team at Ovation to bring UNest over 200 credit unions in the coming months, and excited to lean into growth into 2025.
Awesome. Thanks so much, Mike. Yeah. And if you have I encourage everyone, reach out via chat to the founders that you see where you want to talk directly. I'm going to ask if you're giving an update or if you're presenting tonight, drop your email in the chat. It will make it, if you feel like it, make it easy for the investors to reach out and contact you. Okay, so I think you were called out there, Kevin. So Kevin Simmering is the founder and CEO of co-founder and CEO of Ovation Ventures. And they've actually, one of the nice things about having a portfolio of incredible people is you can pair them up and they can scale together. And Kevin's got some news on their recent partnership with Balance. So why don't you take it away?
Thanks, Garrett. Good evening, everybody. First off, I just got to say, Garrett, that little 2-week trip you did looks good on you, man. You look super healthy. Nice glow there. And I love that Sun Venture, that blue kind of sport looking top. Looks really great.
You're going to turn me more red, Kevin. Thank you. All right.
Cool. So good evening, everybody. Kevin Simmering, co-founder and CEO of Ovation. Ovation is a enterprise financial wellness platform that's really focused on working with the credit union industry at the moment. And big news for us over the past several months has been a major deal with a company called Balance. Balance is a national financial counseling company. They work with credit unions across the nation, Fortune 500 companies, and we've contracted with them to be their platform provider. And so what that means is about 200 credit unions, as Mike mentioned, will be transitioning over onto our platform through this deal with Balance. It creates a wonderful distribution opportunity for us to promote other products and services on this platform to the credit union industry and their members, and a great opportunity for us to work with UNest in promoting UNest as one of our financial wellness partners on the platform. So I guess the update for today is it's going really well, the implementation. There was a great press release a couple of weeks ago that Balance put out. It actually coincides for them with the appointment of a new CEO. So really a great new chapter that they're looking to expand and grow aggressively moving forward. And so obviously we're hoping to work with them to increase that 200 credit unions to even more than that over the coming months. So exciting opportunity. And as Garrett mentioned, the ecosystem that's created here, the ability to work with folks like UNest, and a shout out as well to Uptech Studios. I think Adam Corman is on the call as well. Garrett introduced me to Adam and his team over at Uptech Studios, who we're working with as well. They've played an integral role in helping us develop out our stack over the past several months. So really great to see the whole portfolio network come together here, and excited for the next few months. Final thing I'll say, so the rubber meets the road on March 31st. That's the date that we will be launching to 175 credit unions with Balance, and we're looking good to meet that deadline. So I'll end it there, Garrett. But yeah,
I
excited.
appreciate it. Thanks so much, Kevin. And congrats on the recent traction. We have one more portfolio update, then I think there might be one at the very end of the meeting that we save for Jerome and Berri Organics. Pablo with Clear Club. Are you able to turn on video, Pablo? Good to see you, Pablo. All right. Well, why don't you share with the group what's going on at Clear Club and all your recent traction?
Perfect. Yeah, and I agree. You look very healthy, Garrett. Just to start. So yeah, as a reminder of what is Clear Club, Clear Club basically offers custom night guards, retainers, sports guards, and other healthcare products direct to consumer. We have a subscription model that is our strongest income or like defensive positioning to get like a stable revenue. Last year we achieved profitability, and what is coming up next that is very exciting to announce is that we will be focused in the B2B market. And kind of we got a great hire recently that it will be basically developing this business with different DSOs and largest dental offices, so we can get that channel like conquered right away. And yeah, we will be working. We had some pilots before that we were doing, and we were already closing some dental offices, but this will bring it up to the next level because it's closing directly with big DSOs. And I think that I wanna like thanks Garrett also and Zoom Ventures in general. I think that what it has been very helpful is that not only he helped me to close this hire that is one of the most important for the company right now, but also about like getting the synergies with other companies that are in the portfolio of Zoom Ventures, because if there are other companies already exploring or that they have developed relationships in the dental space, he immediately saw the synergy between these and will help us to speed it.
Thank you so much, Pablo. We don't need to turn it into a some love fest. We got presenters to get to, and so I appreciate it very much. Very kind. But Skylar's gonna just get up and leave if she doesn't be a founder present and hears any more about her dad. So let's Pablo, please drop your contact info. I'm sorry to cut you off. I just realized we're a little over time here. And I will say that Pablo is already profitable as a company. They're scaling, their largest direct-to-consumer night guard company in the country, and we're really excited about the progress that they're making. We had a great board meeting the other day. All right, so one of the nice things about this meeting tonight is that we have a variety of, I would say, stages from pre-seed to seed, and valuations and industries. So our first company, I'm really excited to get to introduce Jess and Lindsay, the co-founders of Dryft Sleep. Jess and Lindsay both are serial entrepreneurs, having been a CMO in the case of Lindsay, and in the case of Jess, having built Maven. So definitely a wonderful PR firm, definitely understand branding, understand marketing, and saw a real need in the sleep and wellness space, which is, I was surprised at how fast it was growing and what the numbers were. So I am excited to pass things over to them and let them share with you about their company, Dryft Sleep, and the products they're offering, and share the recent traction that they've gotten in many stores across the country. So why don't you guys take it away? We get it? Okay, good. All right.
Can you see my screen okay?
Yep, sure can.
Great. Can you hear me? Awesome. Thank you so much, Garrett, for having us. We're really excited to be here and for that great intro. As he mentioned, I'm Jess and I'm joined by Lindsay, who you'll hear from in just a bit. And together we're the co-founders of Dryft Sleep, the before bed brand. So before I tell you all about it, I'm curious how many of you or your partners used some sort of sleep product last night. Maybe something like an eye mask or a comfy mattress, something you consumed like a supplement or a beverage. There was likely one thing that contributed to your good night's sleep last night. And because of that, we know that the business of sleep is absolutely booming. We're looking for all the ways to enhance our wellness and sleep better. We know that better sleep equals better days and a better quality of life. And for us, the real opportunity is in consumable sleep wellness. We believe that sleep is the biggest wellness opportunity today. By 2032, the global sleep aid market is projected to reach 157 billion, growing at a 7% CAGR. And why? Because sleep is one of the most measurable wellness habits today. With wearables like Oura Ring and Apple Watches, consumers can now track their sleep in ways that they never could before. So now we objectively know you either slept well or you didn't. You either feel like crap in the morning or you don't. These data-driven insights are why people are spending more than ever on sleep. But here's the problem. No single brand has addressed the needs of sleep in a truly multifaceted way. We've seen tons of supplement brands in our industry who have one sleep product in their dozens of SKUs, or durable brands like mattresses, weighted blankets, sleep tracking wearables. But no one has completely built a comprehensive suite of sleep products that evolves as a consumer's life cycle evolves, until we decided to deliver it. And in just over 2 years, we've had incredible traction. We've been completely bootstrapped and part-time, but we've been profitable since year one and done over 500K in revenue, almost entirely D2C. What we know is working is we have a $45 AOV, about 6.6 orders per subscriber, and a blended D2C margin of 78%, which is very healthy for the category. But the real momentum is happening in retail for us. Over the past 12 months, we've been laser focused on retail expansion, and the results have been huge. We're now in 110 US and international retailers, including Erewhon, where we're currently the #3 best-selling personal care item across all locations in just 2 months. Free People, which is a subset of Urban Outfitters, and we were the top 5 best-selling item in Q4 of last year. Amazon continues to perform well and be a driver for growth and innovation. And as of today, we're so excited to be able to share this. We launched on Target.com with 2 SKUs, and we plan to expand on shelves. So feel free to Google it because we're pretty excited. And last but not least, definitely most exciting, we are launching as the first and only mouth tape on shelf at Sally Beauty this May, which has more US locations than Sephora and Ulta combined. Pretty good stuff. So why is now the right time for Dryft to enter the space? Because women especially are prioritizing sleep more than ever. 61% of women say that getting a good night's sleep is a daily priority versus only 48% of men. Women are 40% more likely to experience insomnia than men. Sleep is no longer just a nice to have, it's a necessity. And that's where Dryft comes in. So our focus, as I mentioned earlier, where we see the biggest opportunity is sleep consumables. We break that down into two categories: sleep wearables and sleep topicals. Sleep wearables is mouth tape, our hero product, which supports nasal breathing versus mouth breathing while you sleep. Silicone earplugs, which is our second product, and then things like sleep patches or wrinkle face tape. And then sleep topicals, magnesium spray, which is our latest innovation, and then things like magnesium bath products and overnight skincare. These are frequently purchased products, perfect for subscription, and create multiple touch points across a consumer's evolving sleep journey. They're not just for teens or their boomer counterparts, they're for every stage of life, adapting with the changing needs that we have over time. And our most exciting innovation, what we're working on right now, is launching next month our Starlight Infused Mouth Tape. Why is this so special and not just a fancy name? This is an overnight wearable sleep mask that doubles as mouth tape. We're the first to market in the category, and it combines skincare and sleep care into one wearable product. Lip masks have been huge in the category for years, but this product stacks the moisture aspect with the science-backed benefits of mouth tape. So it's two services, one product, proven results. For women especially, this is completely revolutionary. We, for one, are just so excited about it. And with that, I'll put Lindsay on the hot seat to take us through the rest.
Hi, everybody. I'm Lindsay. I'll jump in here to talk a little bit about Jess and I. So Jess and I have been in consumer goods for 15 years each. I'm a three-time entrepreneur. This is my third venture. One of my first ventures, I grew to a multi-million-dollar size in stores like Whole Foods, Sprouts, Amazon, Kroger, and 15,000 points of distribution. And over the last 4 years, almost 5, I've been a fractional CMO to over 20 consumer brands. So I've gotten to see the P&Ls and the back end of so many different businesses that I am now bringing those learnings into Dryft Sleep. Jess has been doing the same thing on the PR side with her agency Maven. She ran PR for Perfect Bar through its acquisition to Mondelez, and has since consulted or advised or been the service provider for over 30 consumer brands in the CPG space. And she's deeply connected in CPG and personal care in Southern California. We are also supported by an incredible advisory board that span many categories, including a dentist for oral and airway health, adhesives, as many of our products are made with adhesive materials, skincare, which of course we are going into now with our topicals, sleep, and then we have a Techstars EIR that is a former colleague of mine. She's a venture advisor and she helps us with finance. So one of the things that makes Dryft completely unique is our recognition in the category. If you've been on TikTok or Instagram or even just Amazon, you have likely seen mouth tape somewhere. And we have simply become the most recognized brand in the category. And it's partly because of that we've gotten into so many incredible retailers. We've been in Vogue not once, but twice in the last few months, including the only mouth tape brand on their affiliate wellness shop online. And Elle Magazine named us the best material of mouth tape on the market. So where does that take us? Where does that put us now? And where does that take us tomorrow? Our current retailers, well, actually, I'll start with 2023. So we started that year with D2C and Amazon only. Last year, we started moving into our specialty retail. That included stores like Erewhon, Urban Outfitters, Free People, Health, which is the UK version of Thrive Market. And this year, we are already moving into our big box retailers. Like Jess said, we are live on Target.com, which is incredibly exciting. And we will be the first sleep-focused brand in Sally Beauty launching in May. We think our channel expansion will be focused heavily on big box and beauty, Ulta being a key brand there, as well as some specialty retailers like Express Spa and Equinox. And we plan on expanding the product line, as Jess mentioned. Our growth plan includes maintaining our current profitability. As Jess said, we are completely bootstrapped and self-funded, and we've gotten the company to an incredible inflection point, which is putting us in a position to start scaling and thus fundraising. But we see efficient omni-channel growth as the key impetus for our success. That includes discovery or experience-related retailers like beauty and wellness and spas, need-based environments like travel, hotel, and hospitality, and then, of course, circling or finishing that repurchase cycle with D2C, Amazon, and your mass retailers. We see two different categories of potential acquirers for Dryft Sleep, and we are intent on finding an exit in the next 3 to 5 years. Those two categories include personal care conglomerates like your P&G and Unilever, but we also see a category of sleep-focused brands like 8 Sleep, Aura, and Casper that focus on selling very high-end or expensive sleep products. And we know that they can only sell to those audiences once every year or multiple years with their high price point and duration of the customer use of their products. So why not consider bringing in Dryft Sleep? You have an audience focused and intent on buying sleep. Why not add Dryft products to that mix? So with our growth plan, our use of funds for this current raise is divided up into R&D and inventory, right? We are working on our infused mouth tape. We'll be doing new packaging for that. We'll also be upgrading the packaging for our magnesium spray. We will be using part of the funds for marketing and retailer support, Sally Beauty. We need social media content creation to support all of our retailers now, as well as PR seeding, in-store training, and support. We, as marketers, know more than ever how important it is to sample our products. And so we want to be on the ground, in the field, getting products on people's mouths, on their faces, on their bodies, so they can experience it and really understand the value. And then, as Jess mentioned, we are both part-time on this business, so part of our funds will be going toward our salaries to go full-time. So to wrap it up, this is a 500K seed round, 75K of which has already been secured. One of our investors is the founder and CEO of Perfect Bar, Bill Keith, and we also have a D2C expert in the round who saw the value of the category and is why he invested. It's a safe note with a $3 million post-money cap, and we'd love to answer any questions you may have.
Great. I'll kick things off with a question and then open up for the group. What do you think is the next essentially fundable milestone that you're going to achieve with this 500K? What does revenue look like over the next 12 to 18 months? Where are you going to get, and what is the target for your next raise and markup from a valuation standpoint? And if we take it just a tiny bit further, what type of exit are you targeting, and who are your potential acquirers, or what is the long-term goal for the company?
Yeah. So in terms of growth trajectory, we are estimating a $1 million in revenue this year, $3 million about next year. That could go much quicker. We have just launched new products on Amazon, and those of you that know the Amazon marketplace, it's very possible to scale quickly based on consumer demand. In terms of growth trajectory with acquisition, as I mentioned, it's 3 to 5 years is our goal. We think of sleep as a very fast-moving acquisition category. We are the first and only sleep-focused brand of our type and size in the market today. And as I mentioned on an earlier slide, if you want to go back to that, Jess, there's two categories of acquirers. One would be the P&Gs of the world, Edgewells, that are already in personal care, and the others would be sleep-focused brands that want a higher velocity product for their existing audience.
All right, thank you so much. Feel free to chime in, group, with questions.
Well,
I see
just a quick
Ron,
one.
go for it.
Yeah, just a quick one, Lindsay. Thanks very much. What's your defensibility for your products?
I would say number one is brand, honestly. I mean, you don't get 40 media placements in less than 2 years from the biggest publications in the US without having a very strong brand. If you guys go and start searching for mouth tape after this call, I guarantee you're going to see a lot of copycats. You're going to see a lot of blah branding, blah messaging, and that's what really sets us apart. It's why Sally Beauty reached out to us, why Erewhon reached out to us. These were not we were not outreaching to these audiences or to these retailers. We weren't even doing trade shows. These were buyers that saw us in the market, saw something hot, interesting, and exciting, and found us.
And how much capital do you expect? I'm sorry, go ahead, please.
Oh, I was just going to say, we also did a ton of work and exploring patents and seeing what would the benefit be to getting that. And we knew we could build a brand quicker, that, we would getting a patent on a piece of tape that is medical grade tape is not worth the time and money that we have right now. We'd rather build a brand and be so far ahead that anyone coming into the mix, which they have, can't catch up to us.
Yeah. And
how much
in terms of defensibility, we actually already had a brand copy us, use our same material and almost identical shape, and they already went out of business.
Cal's going to be the next for a question, unless you have another one, Ron.
just a quick one. How much total capital do you expect to need in the future?
Oh, right.
outside
Yes. I was
capital?
going to answer that, Garrett, earlier. So I think we're going to have probably a $3 to $5 million raise within 18 to 24 calendar months after this rise is closed.
And that would be it, or you would need more beyond that?
Just depends. I mean, it really depends on the profitability of our channels. As you know, it's much more expensive to grow a channel in retail like Sally Beauty and Target than it is to grow Amazon. If any of you are familiar with like Hero Beauty and their trajectory, they were acquired by Church and Dwight. I would love to follow that trajectory, but part of why they succeeded was Amazon was their biggest channel, and I just can't see a crystal ball about which channel is going to be bigger faster.
Thank you.
All right, Cal, you had to raise your hand.
Yeah, so first of all, congrats on the progress you've made. It sounds very exciting. With that fast growth, how are you going to finance inventory? If you open up all of those channels, are you raising enough money to supply product?
Yeah, I would say that the 500K is conservative. However, we are already a profitable business. Our burn rate every month is about $7,000 to $8,000. That doesn't include founder salaries, so that will obviously change. But we have been able, I think it's just a credit to Jess and my backgrounds that we can do this at a very low rate. I mean, we have an expert, like a director level operations person that we just signed today, who's basically coming on for $2,000 a month. And they run operations for multi-million-dollar companies, $50 million companies. So I think it's just a matter of like know-how in the space. But again, no crystal ball. I think the best thing we can do is be very efficient with our capital, not over order or over forecast when we need to be conservative, and then also putting our foot on the gas when we know there's an opportunity.
All right, thank you.
Did we have another question? Lee, go for it.
Hi, Lindsay, real quick, you mentioned consumables in this space. I assume we're talking things like valerian root or whatever it is that might be consumed. What are you doing already that's in consumables, and what innovation, if any, are you aware of in the consumables space?
Yeah, I should be clear. We use the word consumables as in you use them up, you consume them, but not necessarily that you eat or ingest them. And I think it's we very specifically left supplements off of this slide and off of our initial vision statement for the company. Why? The reason is there are a lot of brands doing sleep focused supplements, teas, and other products right now, and they're doing a really good job. And I think that is something that our acquirer will be able to do on their own once we've built up the brand with more innovative products that can stand out a little bit more substantially.
I'll also mention that from a marketing standpoint, we've been attracting passively all the truly digestible brands in the food bev supplement space that are attributed to sleep, because nobody else is doing sleep wearables and topicals like we are. So we're kind of like the cool kid on the block because we're not competing against them. We are gaining traction and awareness in their audiences by complementing them.
All right.
Just where is these products manufactured?
Yep, everything except our earplugs is in the US.
And warehoused locally or
in California and Ohio.
California and Ohio. And how is the quality controlled?
Quality control is excellent. We use a medical grade tape. It's made by 3M. It is the same tape that you would use in an IV in a doctor's office or in a hospital. That was very intentional. We wanted a material that was the safest and most gentle on skin. And again, I encourage you to look at the category and you'll see a lot of K tape, which is meant to restrict muscles for, it's not meant for your lips, I should say.
Kinesiology tape. It's like physical therapy tape that's supposed to hold your muscles together and actually like tears off your skin.
Yeah, and we intentionally did not use that because we don't feel that it's appropriate for your facial skin or for breathing in all night. But in terms of manufacturing, we're in a medical grade facility. It's all medical grade tapes.
Okay.
And then our spray is made in like a beauty manufacturing facility.
What about the chemical composition on the right side? The uniqueness and how does that, are these standard bits or specially formulated?
So the adhesive tape is not specially formulated for us. However, our infused skincare mouth tape will be proprietary to us. It is our formula, and our magnesium spray is also our formula that we own.
is there any risk, liability on these kinds of chemicals?
In terms of the spray and the balms, not really. It's just like any other skincare brand. I would say
It's all natural too.
yeah, I would say in terms of the tape, I mean, the biggest concern we have as a manufacturer is, someone not breathing, right? Ours specifically has a breathing vent, that's that hole in the middle, so that you can breathe through it. We also do not recommend its use on children. And it is not tight enough that you couldn't wear it. We also have liability warnings on our website and on the package itself. That doesn't, there's no universal protection of something like that. Someone can always do something weird. But generally speaking, this product, mouth tape in general, is so popular that we haven't yet seen anything that would lead us to believe that there is a danger.
I see.
And we have really good insurance.
Yeah.
So there are no diffusers here. I've seen lots of diffusers being sold, no diffusers on your product line.
Nope, we're sticking with we're sticking with wearables and topicals. So anything that you use on your body, we say it's 30 minutes before you go to bed. So we want all of our products to live in your nightstand and you use them when you're actually in bed versus in the kitchen or in the bathroom before bed. That's for other brands. We want to be the brand that lives in the nightstand.
Yeah, and I want to kind of add that a big thing about our brand is that your sleep needs change throughout your lifetime, especially for women, right? Just say you're in college, you have noisy roommates, you want to wear earplugs, right, to drown out that noise. But then maybe you're older, you have a baby, you can't wear earplugs anymore because you need to be able to hear your baby, but maybe you need some other sleep aid. So you'll try mouth tape. And it goes on and on, basically. Like we want to be your full lifetime of sleep related consumable products.
Okay. Raj, do you have another question?
No. I said I'm willing to try it and give it to my boss.
Because I already put it on my child.
If anyone on this call would like to sample the product, we have sample size packs that we'll gladly mail to you.
That'd be good because we have a bunch of diffusers so that'd be good to know. That'd be good to try.
Yeah, so we have a question in the chat from Sally. Before I do that, normally I do a better job of introducing who's asking the question, or at least you guys feel free to also introduce yourselves when you're asking the question so we know who's in the room. But Cal asked a question earlier. Cal's a serial entrepreneur who's also the chair of multiple Tiger 21 chapters out on the East Coast and a Some Ventures LP. Raj actually was with Siemens for 30 plus years and led more M&A than anyone in the history of Siemens. Just very proud of our group of investors that we have here and want you guys to have some context as to who's asking the questions and who's pinging you. Sally is actually probably, I don't know, I think it's probably at least in the Mount Rushmore of prolific Pasadena Angels investors, having been the first investor at Green Dot. Sally asks, what kind of information about the efficiency of the products is available? There we go.
Yep, happy to answer that. And hi, Sally. Sally actually invested in my last company 10 years ago. So good to see a bunch of Pasadena Angels people on this call. So efficiency, we have done some small case studies with our own users, but I definitely see us in 2026 pursuing a proper study for the efficiency of our products. Jess?
Yeah, I was just going to add that, historically you've needed to invest $100,000 in a big sleep study, but because of the wearables and trackables like Oura Rings and Apple Watches, we can now do that we've conducted them, and so we have just those preliminary, but we'd love to do something that has a little bit more clout and credibility and really bring in doctors, scientists, that sort of thing. There's also just a ton of research and clinical studies out there on mouth tape in general that we lean on as well, especially from a PR standpoint.
And thank you, Garrett, for answering that question. Our valuation is $3 million.
Okay, well, I think we might have time for one last one if there's a burning question out there. Otherwise, I know I ran late, so I'm trying to do the mental math here.
I was just wondering, hi, thanks for the presentation. This is Asley from the Band of Angels. Very quickly, do you have any information on what your churn rate is for your customers?
Yeah, I can tell you our average subscriber subscribes for 6.6 months or 6.6 subscriptions. So sometimes they order a 30-day pack, sometimes they order a 60-day pack.
Okay, all right. And I think I may be the only woman in the US that has not used a mouth tape before. So I'm going to have to go on Target or Amazon soon.
Please buy it on Target and leave a review.
I will.
So Peter asked a question in the chat. If you could answer that one in the chat and then also drop your contact information so the investors can also reach out to you directly, but I'll be sure to follow up after the meeting's concluded. You're welcome to stick around for a little bit if you want to answer some questions, additional questions that come in, but we got to get on to Nikki, and we're going to go from sleep to fintech. And so I really, again, round of applause. It was really
Thank you so much.
a great presentation. Thank you for your time tonight.
Thank you. Good night, guys.
Yeah, so this is a rare case for me where it was actually, I would say 90 something percent comes from all of you of the deal flow that we see at this monthly meeting. But you know what? Nikki reached out with a very thoughtful LinkedIn message, and I dug in a little bit and realized, wow, this is not just any fintech coming through. This is a very credible founder. She's ex-McKinsey, has Techstars grad, who was able to go and build a brand in the investing space, or a company in the investing space rather, that's really fitting a need, especially for a younger generation investor. But I think that it applies actually to additional investors. And I know I have a younger investor behind me who's got her own Robinhood. Well, I guess I have a Robinhood account for her, but it's pretty exciting how they're getting news on companies and starting to learn more about companies and wanting to invest. Now, I think that Nikki's product target's a little bit older generally than Skylar, but I'm very excited nonetheless for her to present Parrot Finance to you. And Nikki, where are you? The floor is yours to take it away.
Yeah, thanks, Garrett, and nice to see everyone here. Jess and Lindsay did a great job. Awesome product. Gonna try it out. I'm excited to talk to you guys about what we've built at Parrot. So I'm going to share my screen, and then I'm going to run through it in an unconventional way. So I'm going to start with kind of my background, my team's background, and then run through the product, maybe even have time for a demo. So like Garrett said, we're consumer fintech. So my background's in finance. I actually grew up in the Bay Area in San Francisco, and then moved over to New York City to study finance and then work in the space. So I have experience in the private equity world at KKR for a number of years, and then moved over to McKinsey and McKinsey's hedge fund. So McKinsey's hedge fund was a $20 billion fund at the time, investing in VC, PE, other hedge funds. So I was able to kind of get a sliver of that and grow my $600 million fund to over $1 billion in my time that I was at that fund. So I have a lot of experience investing on a corporate level, but never did in my personal life, hence why I wanted to build Parrot. I met my two co-founders while I was in New York. So Lucy, I actually met her at a Goldman Sachs interview right out of college. We were in the waiting room for a super day, and we just became really good friends. Her phone died on the way to the airport. She needed a ride, so I called her an Uber, and then we exchanged numbers and just stayed friends. She went on to work for Goldman, and so we stayed in touch for a number of years, and then started the company just recently. And so she has finance experience like I do, but before that, she was also working at the White House for a bit, doing more strategy and operations. And then her twin sister, Victoria, is our CTO. She's more technical. So she has more product and engineering background from Coinbase, Morgan Stanley, Workday. So helped build out Coinbase's platform. We all have kind of that various fintech or finance background. So we do see like a really good founder market fit for what we're building and what we're doing in the space. So jumping into Parrot and what we exactly do, and I'm going to kind of skip around here, but what we allow you to do is we're kind of a creator marketplace for financial education. We let you mimic trades of top financial creators. And these are creators that have trusted records of portfolio returns. We actually pull a lot of creators from social media. So they come from Discord, YouTube, Instagram, TikTok. Now you might be wondering, why am I going to trust a financial influencer on the internet? Well, actually millions of people do. And there's hundreds of thousands of financial influencers just alone in the US. It's kind of a problem we're solving in terms of being a danger, because a lot of Gen Z, millennials, like younger people just starting out their investing journey, go to these platforms to actually learn about investing, where to put their money, what stocks or crypto to buy. It can be really lucrative if you trust the right people. It can also be super dangerous if you're following the wrong influencers. So that's where we basically bring on these financial traders or creators, and then we give them a platform to basically display their trades. We work with a lot of brokers, so we're not a broker dealer ourselves, which takes off a lot of the compliance and SEC FINRA headaches. We actually partner with these brokers. We have 13 plus brokerage integrations. So all the popular US ones and some Canadian ones as well. Our biggest partner is Robinhood. Our next biggest partner is Fidelity. We do have some crypto partners like Coinbase and Binance, and then some of the popular younger brokers like Webull, as well as a legacy broker like Schwab. So it kind of is across the board in terms of whatever you have. And how it works is essentially you log on to Parrot, you link your broker, all of your data and your trades flow through into our platform. You can see all your trades across the board and also execute trades in one place. So it eliminates the factor of basically having to open up 3 or 4 different apps to trade when you can just do it in one place and manage all your balances in one place as well. And another feature we have is we let you follow and mimic trades of top portfolios of CEOs and politicians. And this is super popular, like Nancy Pelosi, for example, who trades with millions of dollars and makes high returns on a monthly basis. And she's been a really popular investor over the years that people want to follow and mimic. So we have her. We also have trades of Warren Buffett or Elon Musk or Mark Zuckerberg. This is all government data that has to be reported by that public figure. So we pull that data and make it very digestible and also give that alert right to your phone and make it actionable. So you can take action on an alert that Nancy Pelosi traded NVIDIA stock. We also do have crypto exchanges. So we have crypto influencers. This has been demand and ask for us in terms of our user base. So we've recently onboarded a lot of influencers here. And so how it works is our revenue model is essentially a creator marketplace. So let's say Jane Walker has 250,000 followers. She posts about her investing journey. She comes on board and brings over 3,000 subscribers. She's able to charge a rate for her portfolio. And what this does is essentially unlocks all her data, and any trades she makes gets sent to her follower base. So she can charge $0 or she can charge up to 200. We have all types of influencers on the platform. And usually you can monetize. And so we do see traders making money every month through subscription plans by displaying their investments. And then we do take a 10% fee. Now that can vary. One thing I don't talk about on this deck is we actually are partnering with hedge funds and RIAs, which is a new portfolio category. So hedge funds have been coming to us asking, can we create profiles on Parrot? Or RIAs, wealth advisors, have been coming to us and saying, we have certain SMAs or AI ETFs or certain types of SMA vehicles that they would like to display and start to monetize and democratize that data to the younger audiences. We do have some competitors. So which is good. eToro is like a big competitor on the map. They're based in Israel, but they do a great job at copy trading. It's just not built the way we do. Autopilot just focuses on politicians trade, and Dub is the closest to what we're doing now. And they all launched pretty recently in terms of the social side of things. I do want to talk about product roadmap. I'm going to skip around a bit, but basically right now we're at a stage where we're acquiring users. So we're building in products and features like acquisition models for referral program, Discord integrations. So Discord has millions of users. A lot of them have gamers, sports bettors, and day traders. So we're getting a lot of users from there. Retention is coming up next in terms of how can we retain our user base. So that leads to increasing engagement, such as leaderboards or streaks or feeds. Basically, what keeps people coming back to the platform that's addicting, that's not really like your typical brokerage, like a Schwab or a Fidelity. That's super outdated. People probably don't want to open up their Fidelity every single day, but we want to make sure they open up their Parrot every day. And then we're going to focus on revenue. So this is just rewards program, discount pricing, subscription plans, and then expansion. We do want to grow into global markets such as India, Latin America, Asia. There's millions of people that we can target in these different countries, as well as hundreds of thousands more influencers or day traders that are pretty active in this space, as well as partnerships. So we do see a robust expansion plan here. And then just jumping into so far traction, and then if I have time for a demo, I would love to show you the product. But basically, we have raised a pre-seed round to date of 2.5 million. Our team is very lean, 6 people. So it's just me and my 3 co-founders and then 3 other engineers. Our product launched actually only 6 months ago. Officially, we were actually in beta for a few months starting last April. So it was a closed group, and we have 40 plus partnerships in the pipeline for launch. We currently have about 15 on the platform in terms of influencer, hedge fund, and RA partnerships. And we're trying to expand that. But we decided to curate the process a little bit more in the first few months and get that user feedback and build out the app. Traction to date. So we have 15,000 users. This has mostly been organic. Half of those users are very active. Our AUM here is about 80 million. So you're going to see that what this AUM number really means is all those assets traded on Parrot and assets connected to Parrot. So essentially, what's that active fund look like in terms of what are people trading on our platform? And that's the number we've seen. This actually scaled up from 400K in April to 1 million in June, and now we're at 80. So we've seen tremendous growth over the last few months. A lot of our inbound comes in from Discord and Twitter. So we have a 30,000 Twitter follower, and our cost of acquisition on ads, if we do spend, which we haven't so far much to date, but it is $3 per user acquisition. So a lot of our raise right now would go towards budgeting for ads, for marketing, getting user growth as well. So I do want to talk about the raise a little bit before I jump into the demo. So we are raising a $3 million seed. Our last valuation was a 2.5 pre-seed at a 10 million post money. Right now we're looking at about a 15 based on our growth. And so some of our investors in the last round are Harlem Capital, Lightspeed, Techstars, Western Union, Plug and Play, Hustle Fund, Liquidity, which is a huge financial account online with millions of followers across the board. So we've had some pretty great cap table investors as well to date. And then, yeah, that's a bit about the product. I definitely want to stop there. Do I have time, Garrett, to give a demo or no?
Yeah, Nikki, I also think it'd be a good idea if you hit the revenue model and how you're sharing revenue with them. I don't know if I might have missed it. I got called, yelled at for a second. Did you touch on your business model?
Yes, I did. I did touch on the creator marketplace, the fees we take on that.
Okay, I'm sorry. I think that it might be on me in this case. I didn't.
No worries. Actually, on that note, I do want to talk about one more model. We could charge a flat rate. We just haven't yet. We haven't kicked in the fees. So we're actually pre-revenue right now because we haven't turned on the creator fees. And we also haven't turned on the subscription plan, which we can charge a flat rate every month. So we plan on doing that sometime this year. It's just that with consumer tech products, you just want to kind of wait till you see that retention, that stickiness. And lastly, this is something we're working with right now in terms of brokerage partnerships, but whatever I stated here in terms of our broker partners, we're working on getting them to pay us a monthly fee or a variable fee based on how many users or trades that we send them. So this is a huge revenue model. Some brokers are willing to pay upwards of $1 million a year to just get their platform spotlighted on the platform, or $80 per new user, etc. So these are the contracts that we're working with.
What was the 10% subscription? I didn't understand that.
Oh, yeah. So it's like a creator, it's like a Patreon model, right? So the end user pays the creator on the platform or the day trader a set fee that they charge. So it can range anywhere from $10 to even $200 a month. And then we would take a 10% cut of that. So it's like the cash.
Wait, have you fully cleared that with the SEC? Because like I tried to take eToro public like in the past and like bring that into the US. They have a model very similar to this like worldwide, and there were like a whole series of like SEC issues in the US related to actually like paying for like investment advice like that.
So basically, great question. We're not an RIA and we're also not a broker dealer. So I can imagine an eToro would probably be under more scrutiny. Like, and we have a very close relationship with eToro. I know that they have a product like this overseas, but the thing is here is you're not really paying for the advice. You're paying for the transparency of the portfolio. And to follow that influencer. And so that's a model that we're still testing. We are thinking about removing that and essentially doing a creator pool where they get paid out instead. So it's an alternative if we do, have an issue with that.
Do you have legal guidance available on that view as to okay.
Yeah, we ran it by our lawyers and Techstars legal team.
You ran it by your lawyers. You have an opinion from your lawyers in writing you can actually share with investors.
Yeah, I can definitely do that. We work with Lowenstein, Ethan Silver's there, and so we're.
You have an opinion in writing from your lawyers you can share with investors, or what do you have? Do you have something you can actually share with investors?
Yeah, I could definitely share something after the call with all of you. But we have something we can put together. We hop on calls with our legal team all the time on this, and there's also competitors doing it, so we're not the only ones. And it's worked well for them. In fact, Dub has been around for quite a bit. They're an RIA and broker dealer, which is actually tougher to even get that approval in the US, and they do copy trading. So we have less scrutiny just due to we focus on infrastructure. We're like the infrastructure on top of your broker versus a broker dealer ourselves. So we don't have to go through the same compliance. You kind of see us more of a social network or almost like a gaming platform in a way.
Someone in the structure is supplying investment advice and actually like has to meet SEC guidance, rules, and regs, whether it's you or not.
Yeah, the thing is, this is already happening online, right? Like Discord, Twitter, Twitch, like there's so much.
Whether it's happening or not doesn't mean like it's actually meeting. Like I said, look, I went through this with eToro, like when we tried to take them public and bring them into the U.S. market. I mean, it's very skeptical. Like I said, you have legal opinions that demonstrate like you're doing this properly. Like, happy to look.
Yeah, totally. And we're super wary of that. I mean, we have such a close relationship with eToro CEO and their legal counsel, Andrew McCormick. And I just met with him last week, actually. So their product functions very differently. So that's probably why they're actually in works of launching something like this in the US. So they are going through, they're filing for IPO. So there's been a lot on their mind, but they are a great competitor. One product differentiator from us and them is that they do auto copying. So essentially you have to place $100 minimum to a portfolio, close your eyes and hope that it's allocated properly amongst that portfolio you're mimicking. Our product is different. It's mimic trade basis. So essentially you get an alert to your phone. You can choose if you want to copy that or not. It's up to the end user. They have to basically
an opportunity for you to show the product. I want to make sure that you have enough time to actually show what you built and
totally.
take time, show the product.
I would like to add one more thing.
Yeah.
Not quite clear what the business model looks like. You have got your business model depends upon acquisition of end users, and obviously they're paying you something. Then your business model depends upon these partners on the back end. It'll be good to have a very simple layout of the ecosystem and understand who's paying whom to what and when and how much.
Oh yeah, definitely. I mean, it works as a simple marketplace model where essentially there's
it looks like a marketplace model. So you're collecting tolls both ways. So it'll be nice to have, since you are the toll keeper, collecting money from both.
Raj, I'm sorry, but I want to see the product demo. We have time for Q&A. Let's let her have an opportunity before we dive deeper into questions. We gotta. I want to give her a chance, but thank you.
Awesome. Yeah, Raj, we'll get back to your question. I just want to run through this. It might answer a lot of your questions, honestly. So, especially Frank. So basically, when you're on the platform, you get access to a lot of different creators, CEOs, politicians. You basically have your dashboard that has hundreds of figures you can pretty much view their portfolios on. Middle tab is your explore page. So you can see different stocks, markets, learn about ETFs. So it's more educational. There's news. You can learn about different crypto. The third widget here is your portfolio. So we built out an interactive pie chart where every time you link your broker, you get access to your aggregated data. You can click on different stocks and you pretty much can view that day's P&L. And you can link as many brokers as you'd like. And what's nice about this is like a dashboard view. So you can add whatever broker you want to connect here, view it all in one place. It takes 10 seconds to continue to add brokers and you don't have a limit. When you click on your tab up top, the bell, you basically get all your alerts. And so I follow Mark Zuckerberg and Options King, for example, as a demo account here. And if I click onto Options King and I want to mimic one of his trades, I can click mimic and it takes me to this checkout screen. So this is a checkout screen where it tells you up top, what you're buying, who you're mimicking, and then it tells you your customizable widgets here. So you can change your USD or your shares. It tells you the price difference from when they bought it versus when you're about to. So this is a difference between us and a typical copy trader that would have to go through a lot of compliance. This is actually up to the user to make that trade. It's up to their discretion. They can edit it. This is a workaround because that execution has to happen by that user. It's not automatically copying. And then you choose your broker at the bottom in terms of what you'd like to execute on, and then you pretty much execute the trade. We do have popular figures, like I said, like Mark Zuckerberg. You can see all of when they trade. We function as a broker would. So essentially you can click on Amazon stock. You see their earnings reports, their holdings, time machine. You can play around with how much would you make if you invest X dollar at this rate. And so, yeah, we have full functionality in that way. And then here's a profile of an influencer. So here's a partnership we've done. This guy has 3,000 on Twitter. He has a great portfolio. He's up 183% for the year. You basically can click subscribe and you get all of that access to his portfolio. So it's like a data platform. You essentially see all the trades, the top holdings, and you can view when he did it. We have plenty other creators. Erica's one of our female traders. We're trying to get more on board. She's up 72% for the year. I haven't subscribed to her, but she charges per month. She has 8,000 on Twitter. So yeah, and Seth Godwin's one of our larger traders. He has 2 million followers on TikTok. He doesn't really charge much because he's more of a passive trader. So he's there to build his loyalty for his customer base. Nancy is a really popular politician, and a lot of people love her. She has to report this data on the government site. So you get all this access in terms of what is her breakout for her portfolio. You can compare her portfolio to SPY or S&P 500, anything you want to compare it to. And then you get that list of securities that they bought and sold. So that's the baseline platform. And we do have more, and I just don't want to take up too much time on the demo here, but we've also built out web, and we're working on launching that as well. So right now we have mobile launched, and we are shipping this very soon too. But yeah, that's a bit of
very great. I'm gonna yeah, but we're gonna have 2 more questions, and then we're gonna take the questions over to the chat. So Georgi has a question, so I'm gonna call on Georgi.
Thank you, Garrett. Hi, Nikki. Good presentation. I'm one of the portfolio companies here. So my question is, what's the latency of the public data when you show like Nancy Pelosi's trade? What's the latency on that?
Yep.
And the second question is, what's the average session time for your users on your app?
Yeah, so latency matters, but it is important. I don't think that it's important for day traders necessarily. They're not really copying like those politicians or CEOs, but for those long-term investors, it's good to know. So it's monthly or quarterly, depending on when that politician or CEO reported it. And then in terms of activity, we have 60% of our audience is active as part of our MAU, which is monthly active users. How we determine that criteria is 1, they have an account, 2, they've linked their broker, 3, they follow at least one influencer, and then we determine how often they open the platform. So we see different rates, but right now we track monthly. And so monthly, 60% of our platform user open up every month. So that's our engagement right now.
Hey, Nikki, quick one.
Ron,
what do you see as your...
Ron, I'm sorry.
Oh, sorry.
Fred had raised his hand. I'm just
sorry. Go ahead, Fred. Go ahead.
Ron, you got the third one, and then we're gonna move it over to chat. So Fred, go, and then Ron, and then we're gonna go.
Thank you. I wasn't as concerned on the legal side of what you're doing, but what about the people that you're bringing on the platform that are giving trading advice? Certainly not all of them are certified or licensed to do so. How do you monitor that and not have a situation where people are taking advice from somebody who's not licensed?
Yeah, I mean, great question. First of all, we're not an RIA, so we're not like auto investing. Second, we're not giving advice, or no influencer is giving advice. It's just putting your portfolio on display. So think of it like you're screenshotting your Robinhood trades and putting it on a Twitter or a Twitch or a Discord or a TikTok. That's exactly what's happening right now anyway. That's how a lot of these younger users are consuming information anyway. And so we're just making it more validating. Like, can you trust an influencer that talks about them selling Tesla on TikTok, or do you actually want to see that trade on Parrot? And it came through a Robinhood that they link. So it's third-party vetted and verified. So it's not necessarily like catering financial advice to any one person or any group of people. It's just all you're doing is putting your trades on display. And I think
I'm sorry. First of all, I love what you're doing, and I'm interested in it. But I would argue that putting your advice on TikTok or something is one thing, but charging people to see what you're trading, by implication at least, is giving them financial advice. So if I invest in this, I would definitely love clarity on that piece of it.
Yeah, definitely. It's a great question. I think one thing is like we're open to revisiting that model. It's just we haven't gotten any scrutiny on that yet. We ran it by a lot of people. We've kind of functioned as like a OnlyFans model or Patreon model, right? But I do think with financial advice, we have to be tricky, but we have to be careful. It's tricky. Why we don't offer chat rooms or like one-on-one chats with end user to influencer is for that same exact reason. You can't tailor advice or give that advice. It's more so, here's what I'm doing. If you want access to my private portfolio and my data, you pay this fee. But yeah, we're definitely open to revisiting that.
I'm sorry to interrupt, but Ron, I want to make sure you got your question, and then if we could do it very quick and then take the questions over to the chat, that'd be great.
Yeah, I think Nikki already did that the pricing model of to and fro.
Raj, I was referring to Ron. Ron has a question.
Sorry.
Ron Collette has a question.
Yeah, Raj, happy to answer your questions.
No, I thought I heard Raj instead of Ron. Ron has Ron.
I can drop my email in the chat, and yeah, you guys can feel free to email me with any questions as well.
So, thank you. So, what's your defensibility here? What prevents somebody from just coming in and saying, "Wow, this is pretty cool, and we can whip this out in 3 to 6 months, and we have $20 million worth of marketing underpinning or backstopping this." What from something like that happening?
Yeah, that's definitely a risk with any company, I do feel. But right now in this space, it's like a lot of it has to do with our creator partnerships who are working with us only. And we also have a great platform where we do everything in one-stop shop. So we have your brokerage integration, we have the real-time alerts, and we work with Stripe as an API to basically allow you to check out and payment process. So yeah, I don't think anything exactly like this exists on the market to date. And I think what's awesome in terms of an acquisition or exit, potentially, it could be one of those competitors that, Robinhood or Fidelity or Schwab, that is outdated, wants to basically up their interface, attract a younger Gen Z audience, and takes too long to build it out. Fidelity would take 2-3 years to build something like this out, where we're a scrappy startup. We can ship a new feature every week. So I think speed is really important. We have an all-star team, and we're just going to keep going at it. But I do think there's a lot of potential exit opportunities, partnerships we could do in that outcome.
Okay. Thank you.
Yeah, I'll say this is Aaron. I've been in this world for a while. There are brokerages that do this already, that Parrot, Nancy Pelosi, and things that Nikki was saying. I think the point that Nikki's trying to bring home is that this is more of a social network where you can follow people that aren't as mainstream as that, or that those other platforms don't have. But this for sure is already a transaction that happens. But I think Nikki's bringing the social aspect to it. Maybe is that right?
Yeah, you got it, Aaron. Yeah, thanks for that.
Aaron, who's paid when you parrot or copy Nancy Pelosi's trade? Who's paid for that? Does Nancy Pelosi get paid for that?
No. You'll pay probably a transaction fee to mimic the trades auto. Like Nikki said, it's auto. So you give $100 to this Nancy Pelosi Parrot, and it probably costs you 102. So you get $100 on your brokerage account, but you paid 102, and then it just auto trades.
Yep, there's a subscription or transaction fee.
Correct. Yeah, it's subscription model at the beginning.
Hence the investment advice and the SEC.
Correct.
Yes.
Correct. You're thinking about it right.
All right, we got it. Guys, I swear startups are like art. The best ones are the most polarizing and create the most debate. And so Nikki, I think you're either onto something just totally incredible, which I think there's a good chance you are, or you know what, the next one will be. But either way, you definitely created a buzz here, which I really appreciate you fielding all the questions. Would you mind sticking around, sharing your contact info? And our fund, we're going to follow up with you next week and set up a deeper dive call. I saw your email. It's been just a little bit of a crazy day, so we'll get that time.
Okay, Garrett, the record needs to show that you made an analogy between art and startups, and how being provocative is a key thing. That's a follow-up conversation we need to have.
Okay.
Thank you very much, Nikki.
Thanks, everyone. This is awesome. Bye.
All right. Bye, guys. All right. So, hey, next up, if you attended our end of year meeting, you got to see a bit of an update from Logan Spears, co-founder CEO of Tensa Sports, and the amazing progress they've made over the past year in their tennis ball machine. Tonight, you get to see a much deeper dive on all the progress they've made. Just full disclosure, we brought them in early part of last year to present in their pre-seed round. before there was even a machine. Ended up participating in that, actually leading it through our fund. And boy, is Logan making me look smart these days with what he's built in less than a year. So Logan, I'm excited for you to share with the group all you've accomplished. And oh, by the way, I'm sure he'll touch on it too, but they're bringing the machine down in April. I believe that one of our LP's homes is going to host, or maybe 2 different tennis courts, so you can see it in action. So Logan, why don't you take it away?
That's right. And I agree. You do look good in that shirt, Garrett. So
this is really good. This is like this is good. This is good. This is good. I'm gonna start not inviting people who make this. All right. And we have new guests here, by the way. I see Michael Shapiro. Michael, welcome. I didn't get a chance to welcome you and Margot earlier when you signed on. So welcome. Normally, my fashion is not such a large point of conversation in these monthly meetings. This is a bit of a unique an outlier. But anyway, take it away, Logan.
Really enjoying it. So, all right. Can you guys see my screen?
Yes.
Yeah,
yes,
I'm seeing
can.
some noms. All right,
Yeah, yes,
thanks. All right. Hi, everyone. I'm Logan Spears, founder of Tensa. We're on the brink of a major transformation in sports and fitness. As AI reshapes industries across the board, the world of fitness is primed for its own revolution. NVIDIA's CEO called physical AI the next great frontier. And we at Tensa couldn't agree more. Tensa is leading that charge, bringing cutting-edge AI into the real world to redefine how athletes train, improve, and compete. If you work backwards and analyze the sports and fitness market, the question becomes, which vertical offers the biggest opportunity? Where is the market large enough, the clientele affluent enough, and the industry most overdue for disruption? The answer is clear, at least in my head: racket sports. With a passionate player base, strong spending power, and a growing demand for smarter, more engaging training solutions, racket sports is the perfect landscape for innovation. And that's exactly where Tensa is making its mark. This summer, we're introducing our first robotics product built for tennis and pickleball. It's a game changer for how players play, compete, and improve. But instead of just telling you about it, let me show you. Here's a sneak peek at what we're building. I hope the sound will come through. Garrett, can you give me a thumbs up if it does? Nope.
Will do. I'll let you. I'm not hearing sound right now.
Okay, let me look at the Zoom. Sorry about that. Yeah, I believe it's in this. It should be in the share settings here.
Yeah, usually you stop sharing and then click on share with sound and share again.
Okay, thank you. Share sound, I see it here. Sorry about that.
You're welcome.
The way we train for tennis hasn't evolved in decades. Until now. Meet Tensa, your new hitting partner. Tensa's an AI-powered machine here to revolutionize your game. Tensa uses real-time analytics it's receiving from you, the player, to provide customized drills. Get ready to be served balls at different locations on the court, at varying speeds and spins, giving you what's needed to up your game.
The idea for Tensa came about when I was playing at 6 a.m. by myself on a ball machine and really did not like the user experience. And with my background in AI, I realized that this could all be done automatically. My wife is a software executive, and I told her the idea. We realized that we can make a 10 times better ball machine than has ever existed. We quickly assembled a team. With AI, Tensa is actually changing how people play and train for tennis or even get a full body workout.
Tennis is the best way to exercise. I've been playing tennis my whole life. It's both the cardio workout, it's cerebellar workout. The real benefit of Tensa is the machine will move to your flow. You can't simulate that kind of activity with a current ball machine. It makes your workout that much better and I believe more interactive. It's much more fun. That's why I'm really, really excited about Tensa.
Our AI-powered ball tracking system has been perfected on real-world data which enables analytics on shot placement and performance. Tensa uses these analytics to move around the court, running drills and plays based on your goals.
We are working on rally balls. Aim 6 to 8 feet above the net with heavy topspin. After each shot, recover to the center baseline.
Tensa can track not one, but 2 players simultaneously, tailored perfectly to each player's ability.
Oh, here we go.
Oh, yeah. I'm going to stop it a little early there because I'll hit some of the points of the deck. But I just want to give people a sense of what we're talking about. All right, so as you saw in the video, we're solving a few key challenges in racket sports. Tennis has a barrier to entry problem that makes it tough for casual players to get into the sport. Private lessons are expensive, often costing over $100 an hour. Finding a reliable hitting partner at your skill level can be challenging. Like I said in the video, I want to hit at 6 a.m., but no one else wants to do that. And traditional ball machines, they're outdated, uninspiring, and largely ignored. It's a forgotten category in need of innovation. So the robotic ball machine that you saw is paired with a companion application that you see here. So Tensa is revolutionizing tennis training by combining that advanced robotics with the mobile app. Think Peloton for tennis. It goes beyond traditional ball machines, offering dynamic simulated play, real-time scorekeeping, and gamified drills for structured skill development. Players receive instant swing analysis with automatic coaching tips and personalized content from top pros, creating a deeper connection to the game. And speaking of that connection, we're building a team of standout Tensa pros, athletes with big personalities, real talent, and a natural presence on camera. Like Peloton, we know that pros can create a powerful emotional connection with the users, making every training session more engaging and inspiring. Our Tensa pros will be the face of our media content, driving user engagement and bringing the excitement of tennis and pickleball to life. And if someone on this call has the energy, skill, and charisma to lead the next generation of tennis training, we are having auditions in the greater Los Angeles area. So excited to see if anybody's interested in helping us out there. Tensa is generating excitement across the tennis world. Clubs, coaches, and players all see the value in our cutting-edge technology. For clubs, Tensa represents a strong return on investment, attracting new members and keeping existing ones engaged. The innovative training experience. Instructors are eager to integrate Tensa into their lessons, using it to motivate students and enhance skill development. The response has been overwhelmingly positive. So a conversation I had yesterday is here on the right. Chris Dudak, who is from Westlake Athletic Club, which is pretty close to maybe some of you, said, who doesn't want to be part of this great freaking machine? This is the level of enthusiasm that we're getting when talking to clubs. Clubs have shown no hesitation at our initial $900 a month price point, and given the enthusiasm, we're considering increasing that price after our early adopter batch. Beyond clubs, we're also expanding into resorts, universities, academies, and private court owners. Plus the mobile application as a revenue for an upsell opportunity. With a lean model and strong margins, we're profitable at just 200 machines once we're fully staffed, setting up for rapid growth and scalability. The bottom graph will cut off here, sorry about that, but we're projecting substantial revenue growth over 5 years backed by a strong financial model with a clear path to profitability. Just 3 years, Tensa is positioned for long-term success. There's a massive market opportunity with racket sports alone, and we're on track to generate $400 million in annual revenue if everything goes well. The Tensa team brings together deep expertise in AI, product development, hardware, and innovation, and media. So as a former CTO at Plainsight, launched over 50 vision AI applications, including for real-time assembly lines and mission-critical systems. I'm also a lifelong tennis player, and I won the West Virginia state title in high school. Elizabeth, also at Plainsight, has an extensive product background, including time at Google, and we successfully led companies individually through acquisitions. Sheldon, a former Tesla engineer, has developed over 10 hardware products and continues contributing to groundbreaking projects like the Tesla Powerwall. Lauren brings over a decade of executive experience from top media networks like HGTV, Food Network, and Discovery. The competitive landscape for Tensa is surprisingly wide open. Most clubs, because of this AI inflection point of these capabilities just being possible, most clubs still rely on traditional ball machines, which are, as I mentioned, outdated, stationary, and lacking real intelligence. One robotics company is developing something for platform tennis and paddle, but those are much smaller markets by comparison, and the machine is really specialized for those lacking mobility. There's also passive computer vision apps that provide analytics, but they don't offer real interaction or training capabilities. Tensa stands apart by combining the AI-driven personalization, autonomous movement, precise shot placement with real match simulation and deep analysis. The truth is, physical AI really hasn't arrived in the space yet, so the market category is wide open. So the investment opportunity, Tensa's a prime example of what's possible in AI-driven startups, fast, efficient moving, and capital smart. We're operated with an extremely lean burn rate to date, $25K per month to develop the robotics platform, while achieving remarkable milestones, and including building the hardware prototype in just 9 months. Unlike traditional hardware companies that require massive capital outlay, Tensa is built a scale fraction of that investment. So we're raising $3 million at a $15 million post-money valuation to fund the manufacturing and meet the strong demand we're seeing in the market. Our unit economics are compelling, and the model is built for expansion. Once we've dominated racket sports, we're going to apply this AI-powered approach to other sports. The opportunity is clear that Tensa is poised to disrupt the stagnant market. And just kind of to leave on a note looking to the future, history has shown that major AI breakthroughs happen in what are called verifiable domains. So chess with Deep Blue, Jeopardy with Watson, Go with AlphaGo, coding and mathematics with ChatGPT. The next frontier is physical AI, and sports provide the perfect domain for AI to learn, adapt, and improve in that environment. Tensa will own the data, the AI, and the hardware needed to push physical AI into the commercial world. So it's not just about fitness. Building these systems is about shaping the future of how we'll use AI. Thanks.
Awesome. Hey, thanks so much, Logan. Let's see here. Who wants to ask the first question? I think I've done it too many times here tonight. Feel free to jump in. All right, I'll throw you a softball real quick. Or tennis ball, I should say. Would you walk through the number of LOIs that you've had signed? Or I think you touched on a couple of them, but I don't know if you actually hit how many clubs have actually already raised their hand and signed and said, look, we want this as it goes live.
Yeah, so we just reached out to our personal networks so far, and we've been doing this for maybe 2 weeks or so. And we have 4 signed LOIs from clubs. Like I mentioned, they didn't really bat an eye on the price, which, you know, that's our mistake. If you're not embarrassed by your first price, you're not doing it right. So we're going to raise that in the future. But we also have a couple verbals past that. And we're just looking for 10 in our initial batch because it's more about execution and getting it right, and then scaling up from there.
Awesome. I think Georgi has a question. Georgi, you want to take it?
Yeah, congrats. Like great job. Really. So my question was about data. You said that you would own data. Like, is that do you think there's going to be a problem with that? Because the data is going to be actual humans interacting with it. I mean, I imagine. And then your platform, the hardware platform, do you see it being scalable enough as you come up with new models with new data that it will kind of adapt, or do you see making the hardware obsolete in a year or 2 years because your model will kind of outpace its capabilities?
Good question. So the hardware the hardware is rated for have a very long longevity. So all the parts are rated for at least 15 years. The hardware of the actual mechanics of shooting the tennis balls is not going to, and pickleballs is not going to decay and not going to change. So that we see as having a very long lifespan. The compute module is the only thing that could depreciate significantly or more significantly than the other parts that we see. And that's going to be, so we might have to trade out the compute module after a couple of years or something like that. But we'll be doing over-the-air updates, software updates, that kind of thing, to make sure that our fleet has the latest and greatest features. And it'll be paired with an app that will also be updated, obviously, through the stores. Hopefully that answers your question.
Michael's got the next one, just whenever you're ready.
Thanks, Garrett. So, Logan, how does the coaching work as far as grip, footwork, stroke?
Yeah, good question. So, as I mentioned, we are really circling around the idea of Tensa Pros that will be the highlight of essentially the media in the mobile application that users interact with. So that's probably not going to be at launch, but that will kind of follow the launch once we validate the hardware, the software, working on all the clubs and kind of the little problems that can occur, kind of getting all those under control. Then we'll likely launch kind of the media content with instructional material. I think the closest analogy is like what if you go to YouTube and you see common influencers in tennis and pickleball create content. It'll be kind of very similar to that, except it'll be high production quality, tailored towards kind of specific skills and drills designed to be used with the machine. Hopefully that's helpful.
Okay, now that I understand, thanks. But it wouldn't be, I thought the analogy, I was wondering if the analogy you were going to say would be like telemedicine, where, some pro is sitting watching you and saying, okay, now let me walk up to the camera, show me your grip, and, sort of doing it.
No, I think I think live is interesting. I don't think we'll start there. I think we'll have to beta test that. We're kind of thinking about live, but our first pass will be kind of static content.
Got it. Thanks.
Other questions in the group? Oh, there, Ron. Hi, Ron. Go for it.
Hey. So I see Michael had his hand up, Michael Shapiro. So
he just asked his question. We're good.
Okay, all right. Just a quick one. As it turns out, I am taking tennis lessons and the whole bit. Decided to pick it up after I figured I play ice hockey, and I figured I won't be playing ice hockey forever. I mean, this is really cool, right? I mean, it's obvious, it's really cool, and I can see it. What's the biggest risk in your mind? What keeps you up at night, concerns, and so on?
So I think the biggest, I wouldn't say it keeps me up at night, but the biggest risk is essentially the manufacturing ramp. Like, how fast can we ramp the manufacturing while keeping quality control, while keeping, because this is going on tennis courts. This is going to be interacting physically with people. We do have, the software safeguards in place. We'll have the liability insurance, et cetera. But And we do have yeah, I'm not terribly worried about that. I would say the manufacturing ramp. Manufacturing ramp is hard. The advantage that we have, so I give the analogy with Peloton, but the advantage we have over a Peloton is Peloton had to sell a $2,000 bike to get a 45 a month subscription. We have to sell so they had to sell one unit to get a $45 subscription. We have to sell one unit to get a $900 or hopefully $1,200 subscription. So while the manufacturing ramp is a significant challenge, we're talking orders of magnitude lower than like a Tesla. Elon is famous for saying, prototypes are easy, delivering at scale is hard. We will never have a factory. We'll never have to build that many to make it worth that. We'll do cell manufacturing. It'll be highly parallelizable. Yeah.
Okay, thank you.
Also, we're somewhat resilient on the bill of materials because it's a high-end product, so we don't have to spend an enormous amount of engineering effort into reducing the bill of materials. I've also talked to Raj a lot about this, so you can.
Cool. Maybe I can try it out.
Yeah, I think we will help Logan with the ecosystem of manufacturers, both in the US and perhaps locally. And then the next thing that what we have suggested is incorporation of physics. I think
right.
There was a question asked about grip and human, and I think that physics will open up incorporation of physics with AI. That will open new markets with the racket manufacturers, ball manufacturers. So there's a whole adjacency in this that will open up once people get used to it.
Oh yeah, I love that. The Magnus effect.
Yeah. Well, they'll
exactly.
Yeah, they'll be
very good.
Yeah,
most people don't know about that.
Okay. Well, I think.
Hey, Garrett, I had one more question.
Yeah,
I had one more question. Really two. And Logan, great idea. I can see this product being in every neighborhood swim and tennis. My wife does it recreationally and pays for a lesson. But if there's something like this, it'd be great. Have you thought about this? This might be off the roadmap, but can this thing pick up balls when you're resting?
Yeah.
I saw a picture where someone was dumping balls in there. If it could pick up balls too, like a vacuum or something like that to reload itself while the person gets a drink or sits down.
Absolutely. I had to ship the product in a reasonable amount of time, or I would have certainly, being the engineer, added that first. But if you do a thought of experiment of what's needed to accomplish that, you need mobility, which we have. You need the ability to see the tennis balls, which we have. The thing that we don't have is essentially the way to mechanically put it
mechanics.
Into, yeah. So we've kind of tried to future-proof it, where we do have a module area where we can add that in the future, because it is a known goal on our roadmap.
Great. And then one more question, if I can, because I love this. I love this idea. I'm a sports guy anyway, but I'm thinking about my kids and baseball.
Mm-hmm.
If the AI could replicate a certain level of pitcher to a certain level of hitter, improve the kid, because right now the pitching is like it throws 100 fastballs or 100. It can't go back and forth, and it definitely cannot adapt. So that could. I mean, I'm just trying to think.
Yeah, we've identified. I probably should have put it in the PowerPoint, but we've identified baseball after the racket sports as the next opportunity we're going to go after.
Very cool. Very cool. Sorry, I didn't mean to take any more time than Garrett has planned, but this is a great idea. I love it. I can see it everywhere.
Hey, Garrett, I'm going to jump in here for a second. So Logan, I do have an idea for you on baseball for a follow-up independently of this, but big picture down the road, in terms of the data that you're collecting and the human movement you're observing and replicating on the Tensa side, do you see the data you're collecting as being valuable independent of the business model in the context of developing robotics and computer vision? Is there a bigger agenda that you could serve looking out a few years?
Yeah, absolutely. I mean, if you see what companies like OpenAI and others are doing, is they're paying for data to train their foundation models, which are increasingly becoming multimodal. So first it was language and image, and then video, and now it's robotics, right? So we have a unique set of data that is highly diverse, with a lot of human movement and actuation involved, that I think will be very valuable. Like I mentioned at kind of the tail end, it's a verifiable domain for advancing robotics application, which in AI is kind of, we're playing in a gold mine effectively. So there's other acquisition angles other than just the core business model.
I think, if I may add, you'll have to also make sure that when you sell a machine, you give a clearance that you're not going to use individual data, but aggregate it for best practices is what I think you're talking about building a model, because I think individual data would result in perhaps some liability somewhere.
Yeah, so I've worked on applications in the past where you visually de-anonymize or anonymize the data. So
Exactly.
basically, you make it look like a person or a different person, effectively.
Right, and then you're not making it personal, but the whole idea is to build a model from there, aggregate best practices out of that. Yeah.
Yeah, and certainly we're going to have that. We have that language in our contracts with clubs to be able to use the data, but respecting
Very
users'
last
privacy.
comment, Ron, very last comment.
Yeah, very last one. Does it provide feedback to the student, as it were? Like it's watching how you're hitting the ball and the whole bit and saying, hey, you're late on your setup or whatever it might be.
Yeah, initially we're going to do that via analytics and in post, but we are exploring actually doing it live through audio feedback. So we can analyze the form in real time, and it's really a user experience question of, do they want to hear it from the pro?
No, I'm not suggesting.
Yeah.
Well, I'm not suggesting it to happen in real time. I'm suggesting like summary report, a one pager that says,
absolutely
X, Y, Z. This is the problem that you're consistently exhibiting, for example. Right. And I'll leave it at that because I know I don't want to take any more time.
All right, so what we have next, hey, Logan, great job. Please stick around. We have an update. As I mentioned at the beginning of the meeting tonight, we had a founder that wanted to make sure that we could have some time for at the end. Jerome is a portfolio founder of some. I actually believe some band members also invested in Berri. The story behind Jerome is it's really incredible. He's a cancer survivor who wanted to go out and build a healthier beverage. He's done that. He's actually on the verge of a Series A. There was a bit of a hiccup along the way. I'll let him explain the timing. It's just really more of a postponement. But I want to give him the opportunity to share with the group what he's accomplished, where they're going, when he expects the Series A capital to come in, and how we can collectively help him in the interim to achieve his goals. So Jerome, I want to hand things over to you. I know it's not like a normal full pitch, but I know that most members are pretty familiar with the company already. Okay. Take it away.
Awesome. Well, thanks, Garrett, and great to see a lot of familiar faces today. I'm in the airport, so apologies ahead of time if there's any noise. So a couple updates before our strategic Series A round. When we last presented an update to the band and some ventures or commitment from Walmart was preliminary, and now it's official. They've approved us for 1,800 points of distribution launching this May. It's an incredible win. If you're not familiar, Berri Light is our signature product. It's the first to market all organic electrolyte solution. that goes head to head with billion-dollar competitor Pedialyte, which has dominated the category for decades. We have a couple other significant retail wins other than Walmart, which is the #1 seller of Pedialyte across the country. Target, we're in advanced discussion with to launch a 12-week program, and 100% of their chain that would add incremental revenue of $1.5 million, and a couple other chains that have actually added a couple more products in our portfolio to their store sets as well. The innovation that we're launching with Walmart in our new retail stores is this product on the right. It's a smaller bottle of Berri Light, which will be positioned a full dollar under Pedialyte, and at 55% margin. Quick update as well. We have a 25-year beverage veteran that has joined the team of Berri Organics. He brings tremendous experience growing and scaling two beverage companies to category leaders. So starting the update on the strategic. So we had a term sheet signed with a strategic beverage company to invest $3.2 million in our company, and also put us in all the trucks that would bring us from 3,400 stores to over 150,000 stores in the next 4 years. That deal is still coming through, but just slightly delayed. A couple value adds. They're the #1 market share leader in the region of Latin America, primary competitor to Coca-Cola. Again, they've already signed the term sheet to fund the $3.2 million. Originally, the deal was expected to close on January 30th, but was delayed at the last minute due to the strategic company's CEO requesting that we improve the taste profile of our products before funding, which was originally going to happen after funding. So it was definitely a bit of a delay setback, but like I said in my shareholder email, setbacks don't define us. We're like Garrett mentioned, I'm a cancer survivor. We're a team of fighters. We are very adamant and confident in going back to the drawing board and improving our products. Again, we scored a 76 in their taste panel, so to get to an 85, it's not that far off. I'm actually here in Colorado working with the food science team to get to a score of the 90s so we can get to the funding before April 1st. So just real quick, our projections anticipate that we're achieving just under 6,500 stores to reach these projections. So they don't include any of the 150,000 stores we would get from the beverage strategic. Because of this funding delay, this does have a really challenge for the business in terms of our Walmart launch, because we're getting ready to gear up for our Walmart production at the end of March. So we are reopening last year's Safe Note round. That Safe Note round is fully funded, oversubscribed at $1.8 million, and we're accepting additional commitments until March 17th. That Safe will convert to that Series A at a 20% discount. 100% of board members reinvest in a Safe Note as well. And we have a couple other notable investors other than Sun Ventures, including TCA, Band of Angels. Very honored to have them on board. Thank you, everyone.
Awesome. Well, I tell you what, Jerome, if you wouldn't mind dropping your contact info, or I can drop it if you're doing this from your phone, but in the chat. I mean, we have a couple of minutes for a quick question from anyone in the group. I have a clarifying question because I heard two different numbers. I heard that and maybe it's just that your goal is to get the flavor into the 90s, but you mentioned 85. So is 85 the benchmark, or is 80 the benchmark in order to get approved with Series A? And is there any other way that they could wiggle out of the term sheet that they presented you, previously?
Great question, Garrett. The benchmark is 85. I mentioned the 90s because we're targeting 90s. So just to guarantee that we exceed that benchmark. No, we don't see any other reasons why they would back out. They've made it very clear this was a surprise to them as well, their entire deal team, that this request came from the CEO so last minute. So they were reassuring that everything else has been agreed to already. The closing documents, all the side letters, everything's been agreed to. So this is just the last step to close the deal.
Very good. Okay. Any other closing questions before we
Just
chat about
just a
the
quick one, Garrett. What's the cap on the safe note or the valuation on the equity round that's impending?
Great question, Ron. So the strategic is investing at a 22 million pre, 25.2 million post. The safe note has a cap of 17 and a half post money.
Jerome, this is Owsley. Hey, nice to see you. Is
Nice to
that
see
the
you.
same valuation as, yes, okay.
That's
great.
correct. Same exact safe note that the band invested in.
Okay.
Yes.
Okay. And then you just for the group, one of the advantages of the strategic was distribution across South America, if I remember correctly. Can you expand just on that real quick before we go jump on your plane?
Yeah, absolutely. So we're in about 3,400 stores approved for this year. The strategic agreeing to put us in all the trucks will bring us to over 150,000 stores. So yeah, that's the main advantage besides the 3.2 million capital. It's their ability to overnight impact our business. If we can sell one case a month at each of those stores, that translates to a $30 million annual business. So it's monumental for our business.
Very good. Well, Jerome, I tell you what, I know that I can attest for everyone in this call that Jerome is one of the most persistent and just driven founders that we've got in our portfolio. He will not let me miss an email, which to his credit, which is to his credit because it's he is on it. He's consistent with the updates and he's out there and he's making it happen. So I'm really happy that you can make this time for us on this call tonight, and I will absolutely follow up after we have an opportunity to connect as a group. Please, again, you already dropped your contact info, so if you wouldn't mind signing off, and the other founders who presented tonight wouldn't mind signing off, we're going to chat about you guys just for a little bit, and yeah, thank you very much.
Thank you, everyone. Have a great evening.
Okay. Great, thanks. All right, so there are a few folks who I see who jumped on, who I did not get to welcome properly, I don't think. Andre, thank you so much for making the time for us tonight. Andre is the founder and CEO of Distillery. We've done a lot of work with our portfolio companies in Distillery over the years. If you're, they've got hundreds of developers across the country, primarily located now, I believe, in South America, and but managed over here in the U.S. And they are doing fantastic work. So, Andre, thanks for making the time. I'm going to go through just a couple, just make sure we welcome everyone. Mike Krebs, former president of Pasadena Angels. Mike, thank you for joining us tonight. Kim runs Pasadena Angels Fund, and it's wonderful to see you on here with us tonight too. Derek Hugh. Derek is gosh, Derek wears a lot of hats, but he is most importantly a Some Ventures LP and a wonderful advisor and venture partner within our fund, and soon to be, I think, a larger role within our fund as we keep growing. So, Derek, thank you so much for making the time to join us tonight. You're probably in New York City, I'm guessing. Is that right?
Thanks.
All
Thanks,
right.
Ken.
And then there's Mike. Mike's on video. Mike, you're looking good. I like the glasses. Mike is another Some advisor, and Mike has a tremendous background in the personal training, health and wellness space, having trained some of the top athletes and business executives around LA over the past few decades, and also been a startup founder himself. So I think if I have not welcomed you to our group tonight, I am sorry. Fred, Carrie, I said hi to Fred. Harry, I did not say hi to Harry probably, but Harry gets too much attention anyway. So we're going to skip Harry.
It's because of my looks.
Yeah, well, you keep telling yourself that, Harry. All right. All right. So what did we like, guys? I'm gonna shut up now. What did anybody feel free? This is open forum. I think we all know who's in the room. This is a great group. Any companies that stood out to the group this evening?
I love Parrot. As long as they can get over the potential legal issues with it, I think it's a great opportunity. The biggest things that I see about it is how quickly can you find out what people are trading? You know, if it's once a month and they traded it 30 days ago, they might be selling into your buy. So that's the only caveat there is kind of a timing thing. I'd love to be able to find out sooner rather than later, but with the reporting requirements that are with the SEC, it may be stale information by the time you get it and can do anything with it.
Yeah, I asked her that question. She said monthly or quarterly, depends on that person.
Yeah,
So
that's right. That's
yeah.
right. So all the politicians report monthly, the hedge funds report 13Fs on a quarterly basis. I think that if you're connecting to a influencer, which was one of the biggest like value propositions, they might be able to link to their brokerage account and
Right.
show it once the trade hits, it might, have a feed because that's not regulated. They don't have to